Alvaro, we have a bank crisis going on. We have different shades of bank crisis going on. Will that diminish global GDP? Do you just assume with financial fragility, things tighten up, even in China, and we see a dampening to economic recovery?
Well, Tom, thanks very much. So first of all, I think it's important to say that we see a fragile recovery going on. Basically, we see some positive news in terms of activity and in terms of confidence all across the world, in fact, and we see some good news regarding inflation, which it's come down in terms of headline, but even though core remains a bit fixed and sticky, and service inflation is a bit sticky. So we've been thinking about exactly what is the impact. We think at this stage, the last few days, the impact has been mostly on the risk side. That is, risks have certainly increased in terms of financial stability, and the risks overall they're more tilted to the downside. But at this stage, we think that it's very important to say that we are undertaking and undergoing a tentative or a fragile recovery that is ongoing.
I know it's inappropriate for you as an institution and you as a chief economist of OECD to second guess central banks as well. But if we're in the interest rate structure we're in now, and particularly ex-Japan, can you state at OECD that in a general statement we are restrictive in our global monetary policy?
Well, we can say that in spite of the turbulence of the past few days, our big problem still is inflation. And so we think that we need to be more data-driven, which means that central banks for sure need to see what they need to do regarding price stability, but also financial stability. And you can see that many countries have followed different approaches. I'll give an example that even before the past few days. Brazil had a big increase in inflation. Their central bank was very forceful. Their core and the headline inflation is coming down, so they are taking a breather now. The Bank of Canada, in the last 2 meetings, they decided to, let's look at the data first. We've done a lot, so let's see if it is enough. And so I think central bank will have to decide what to do. Right now, this important to say in terms of financial stability, this is not 2008. Important to say that banks are in much better shape than they used to be. Regulations also in many countries and monetary authorities are way more active than they used to be. So even though, yes, there are risks and there are some episodes that a financial volatility that could potentially continue, we do think that right now we don't see systemic risk still on the cards.
When does it rise to that risk? When does something break from your vantage point?
Well, I think what matters that it will be exactly if we have really bad news regarding either the inflation front, and that would mean that rates would have to go higher than anticipated, or if there's an unexpected event. Right now, as I said, what we see in terms of our risks is that even though they are tilted to the downside, the economy is starting to have, it's not only the United States, it's also in Europe and China and a few other countries in which we start seeing some positive signs out there. So I think it's important to keep the eye on the ball and understand that in spite of the very short run for volatility, we still think that at this stage the economy is slowly getting back on their feet.
Alvaro, the market disagrees, and this is sort of what I found really notable over the past couple of days. We've seen a huge repricing in Fed policy going forward. We have seen a huge repricing in expectations for inflation and for growth, at least based on the markets. Right now, people are basically expecting Fed funds rates are showing basically one more hike, then done, then almost 100 basis points still of rate cuts. What are you saying? What are you seeing that is so different to that scenario that markets are currently pricing in?
Well, looking at fundamentals. And so I understand the markets, and of course, sometimes markets overreact. Sometimes, obviously, they are on the ball. But we think that we need to look at fundamentals. And for us, the fundamentals are, how is the economy looking in terms of labor market? How is the economy doing in terms of financial stability front? And also, how's the economy doing in terms of activity indicators? And what we see right now is that, yes, it's true that very likely, because of the turbulence of the past few days, it's very likely that, for example, financial institutions might become a bit more conservative in the lending procedure. managers, it is very possible that we might have a few volatility in a few financial institutions, but at this stage we don't see systemic risk on the table.